Want to know how Canada's top entrepreneurs think about creating significant wealth? Join me, Thane Stenner, founder of Stenner Wealth Partners at CG Wealth Management and host of the SmartWealth podcast. Download today at iHeartRadio or your favorite podcast platform. Subscribe now. Welcome, everyone. I'm Thane Stenner, host of the BNN Bloomberg SmartWealth podcast, which is a monthly podcast where I get the honor and pleasure to interview some pioneers and innovators in different industries and backgrounds. So I'm very excited to be with you today. My special guest is Jonathan Medved, all the way from Jerusalem. So welcome, Jonathan.
It's great to be here, Thane. Thank you.
You're very welcome. And I'm really looking forward to this session, especially given your background and your expertise and your experience level. So for those of you who don't know Jonathan Medved, he's the founder and CEO of Our Crowd, the leading online global venture investment platform. So I'll give you a little bit of his background and bio first, and then we'll launch right into some questions with him. So Jonathan was named by the Washington Post as one of Israel's leading high-tech venture capitalists, and also by the New York Times amongst the top 10 most influential Americans who have impacted Israel. Jonathan is a serial entrepreneur, as you'll hear more in this interview, and just an avid investor in the VC ecosystem. One of the pioneers of Israel's venture capital industry. He's a California native, and when he was in his 20s, he moved to Israel and successfully built and exited several startups. Actually, too numerous to name, but had a very successful early on part of his career, and he's continued that throughout till today. Jonathan is a regular television guest on CNN, BBC, CNBC, Bloomberg TV in the US, and Sky News, and is frequently quoted in major business publications. Startup Nation, the best-selling book on Israel's high-tech economy, describes Medved as one of Israel's legendary business ambassadors. Jonathan, I'm telling you, this is not easy to live up to this reputation.
Can we just stop at this point? I think.
Yeah. There's a couple more things I got to get on. Founded in 2013, Our Crowd is the leading online global venture investment platform, and it currently has over 215,000 accredited members and investors, has placed just under $2 billion worth of funding commitments, has invested in 347 portfolio companies, 39 venture funds, and has had 59 successful exits to date. And so some of the major exits within the portfolio of Our Crowd include Beyond Meats, which is trading on NASDAQ, Lemonade, which is a New York Stock Exchange listed company, Arb Robotics, which is also a NASDAQ listed company, and many, many others. PitchBook, which is the industry tracking publication that kind of tracks what's going on in the VC community, has rated Our Crowd as Israel's most active venture investor every year since 2013. Going back a little ways to 1994, Jonathan was also co-founder of Israel's Seed Partners, one of Israel's first venture capital funds, which invested $260 million in over 60 companies, and with many successful investments within that portfolio. So including the Our Crowd portfolio, Jonathan has backed over 400 tech startups as a venture capitalist and angel investor. To say he hasn't been busy in the space would be an understatement. Jonathan has served on many boards and nonprofits, and also many distinguished award-winning items to his resume, serving the Jewish community. So we're very, very excited to have him here today, speak with us. And lastly, Jonathan lives in Jerusalem. Last but not least, I should say, Jonathan lives in Jerusalem with his wife Jane, his 4 children and 12 grandchildren, where he also collects rare malts and loud Hawaiian shirts. So I don't know if you collect the rare single malts, Jonathan, because you've got 12 grandkids, or
No, it's important. I think that a good malt at the right time of the day, usually in the evening,
yes,
is an improvement to life and living.
Oh,
And
well said. Well said. Well, welcome once again. Super appreciative. And I know you've been extremely busy of late. And why don't we just start with that? Last week, in Jerusalem, the Our Crowd had their annual investor summit, and I think over 9,000 people attended it.
yeah, it was a little biblical thing.
Hmm.
Got to be careful of that in Jerusalem. It'll get you. The group that we put together had people from 81 countries.
Hmm.
Uh, and every year until the pandemic, we would gather the tribe, as it were, because people, in addition to using our crowd as a online investment platform, they want to meet face to face with the CEOs of the companies that they're backing. They want to meet other investors. There are about 1,000 multinational corporations who participate in this, who send their sort of tech scouts. There were actually 350 working press there. It was a big deal. I mean, we had the president of Israel, His Honorable Excellency Isaac Herzog, open the conference.
Hmm.
Mayor of Jerusalem was there. U.S. Ambassador Tom Nides, former vice chair at Morgan Stanley, asking him about the recovery and Israel-U.S. relations. We had the star of Fauda with the hot Israeli
I
sort of
watch
spy
it.
thriller
I
on
watch
Netflix.
it. Yep.
Lior Raz and his partner Avi Sakharov, who just recently had an exit for their production company to Blackstone,
Hmm.
or a Blackstone affiliate. So I don't know. It was a wild sort of fun, lots of food. Afterwards, we go to the open air market and drink some pretty good malts till the wee hours of the night. We had a beautiful cocktail the night before at the Israel Museum where we got sort of private VIP looks at some of these incredible galleries they have with their unbelievable collection of antiquities all the way to modern art. And it was just an unbelievable week. Of course, I am ruined. Okay. Getting a much diminished version of Medved tonight, but I apologize to your people. I put my, a considerable amount of what's left of my energy into that event. And but the problem with all these things, that you bring these people together, you have all this excitement, and then you realize that it's all about the follow-up. We
Yes.
literally had 2,000 face-to-face meetings scheduled at this summit
Wow.
between companies and investors, companies and multinational press interviews. And now all of these 2,000 meetings need follow-up, most of them, let's say.
Yes. Yes.
And that's quite exciting. We had our whole team in from around the world. Our crowd has about 15 offices around the world. So it was good. It was really a nice event. We've been through a 3-year hiatus because of the pandemic. We actually did the last one back in 2020, just before the first, wave hit.
Yep.
And it was great to be back and to give people hugs and just, sort of be in a crowded environment. Some people were making the joke that it was really our crowded rather than our crowd. But all in all, it was great. People had a good time. Most of them have gone home. And I'm hoping to get a couple days off with my wife soon.
Oh, well, I promise not to be too taxing today on you, but again, thanks for making it. I know it's in the evening, your time there, but and before we went on, the picture behind you is I don't know, it's a little one shown there, but there's
I'll show you the full
there.
picture.
So
As long as I don't
those
screw up
your
the
triplets.
here. These are
Yeah,
triplets of mine.
yeah,
They're now a little bit older, a lot older.
yeah.
It's part of where you're from, Thane. I'm looking over there, at what looks like the golden city of Vancouver, if I'm not mistaken.
Yes, it is.
The most magical city. What a gateway between West and East. What incredible air quality. And that picture is shot not too far from you, just behind the Whistler Ski Resort,
Oh,
as we
fantastic.
get ready to fill a bunch of buckets for blueberries. The only problem is you take 1-year-old toddlers blueberry picking, not much gets in the bucket. Most of it goes.
Exactly. So, coming back to the VC ecosystem right now, I mean, you've been in the business for many years. You've accomplished a lot of things. How would you describe today's tech environment? Like what you've got a really good pulse on this. So I really want to.
So it's like Facebook. You have the ability of saying it's complicated. Well, I think that's as good a short answer as you're going to get. Or maybe it's Dickensian, right? Like the best of times and the worst of times. It really depends on whether you are managing a portfolio or you're about ready to start building a portfolio. So if you're managing a portfolio, you've just come through a pretty difficult year in 22. NASDAQ was down 33%. There are a bunch of global challenges ranging from supply chain to energy crisis to a horrible war in the middle of Europe. And what's happened to tech companies, both public and private, is that their valuations have really been cratered, right? In other words, if the NASDAQ index was down 33%, there were tons of companies that were down 50, 60, 70, 80% and more, which doesn't make, people so happy when they're holding these companies. Some of the companies deserved it. A lot of them really didn't. But in general, the overall metrics of the venture capital arena change, right? The multiples by which we value a company, which in the public market had, still to a large extent been profit or earnings based. In the venture market, most companies don't have earnings. So you usually do multiples of revenue or multiples of what you call ARR or annual recurring revenue rates. And those just, came down hard because the public comps came down hard. So that's one part of it. But the second part is, we're buyers, right? We every year at our crowd raise hundreds and hundreds of millions of dollars of new capital for both new investments in new companies as well as additional rounds in our existing portfolio. And boy, everything's on sale. Okay, it's a great time to be buying. And if you understand sort of the most complicated thing about buying into companies, private or public, which is buy cheap and sell high. Okay, we're in a great opportunity now. And that's been true, by the way, through at least the 40 years I've been in this business, which is that, a crisis is a terrible thing to waste. Okay, the fact that there are lots of good companies that are now on sale, I think makes it very attractive. Now, the beginning of 23 looks a little different, right? NASDAQ up roughly 10% or so, plus minus. It's bouncing all over the place. Good luck in terms of figuring out whether we're in the beginning of a V or the dreaded L or the U or, whole alphabet soup of what these recoveries, may they come speedily in our days, are going to look like. But it's really, both of those elements. And so part of me loves this time because it's a really interesting time to invest. But, part of me is sweating, okay, because we've got to make sure that these companies get funded to take their licks in terms of, the dreaded down rounds, which, happen when you have funded a company at a certain value. And then in the private market, you have to bring that price down. It's not pretty. Okay. And so, what we do at our crowd is we have 220,000 actually today, investors who come from all over the world. And we're sort of teaching them the ropes about venture capital. What we do is we select deals on a very, very careful basis. We typically choose about 2% of those deals that we look at. So for every 50 companies we check out, we choose one. We invest as principal investors, put our own money, where our mouth or where our website is, at ourcrowd.com. And then we open it to the crowd. Now, the crowd has to be what are called sophisticated or professional, or in the US, they call them accredited investors, according to SEC or whatever security regulatory environment you come from. And then you can invest and actually choose your own startups for $10,000 or funds, which we have 42 of them now, where you can make a $50,000 investment. So, a lot of these people are very excited, and we're excited to have them, but this downturn is new for them, and they are getting an education. We are, doing actually rather well through the crisis in terms of our companies. We focused early on making sure they, had as significant cash reserves as they could have. Some of them, failed in that regard. Most of them seem to be okay. But we're in there in the trenches with them, raising new money, helping them, trim their costs, because the, easiest money you raise is what you save on your burn rate.
Yes.
And so we're working.
So, you've been in the industry for 40 years now, and what would you say, just what would you say the key things are for a venture capital investor to be super mindful of? Just like the key takeaways that you've learned yourself. I mean, you've backed personally or through your platforms over 400 companies. So you've seen a lot. So what are the best things that you look for, and what are the things that you've seen take down companies at the end of the day?
Well, it's sort of like real estate, where they say that what are the three rules of real estate? Location, location, location. In venture capital, location isn't that critical, although it's good to be investing in a good place that has a good legal system and a good ecosystem and whatnot. But what's important, really, the three rules are people, people, people. And especially if you're an investor who's investing in the early stage in a company before the company has developed a product, you don't have, profit and loss statement that you can analyze. You don't have all kinds of metrics. You can look at the idea, is it addressing a big market? That's important. You can look at the technology that the team brings to the bear. Certainly in Israel, where about half of our investments are made, we don't lack from technology, and that's usually not the risk factor that will bite you in the behind when you get in trouble. You want to look at the go-to-market and their business model and the product market fit, but that is stuff that you can often, pivot into over time. The big issue is, who are these people? Okay, are they people of high ethical quality? Are they fun to work with? Are they passionate? Are they knowledgeable? Are they a mensch? A gentleman? Are they the kind of people that you want to get at least married to for probably 5 or 10 or more years? Because really, maybe it's in my case, certainly a large plural marriage, and I'm married to a bunch of them. But the reality is that, we're engaged in a serious way, and it's very hard to separate. Not impossible. Okay, there is divorce options, and those are always a mess and problematic, and one of my least favorite, parts of this business. But it's always about the people. And when things go wrong, it's usually either another investor goes nuts, so that we call investor dysfunction syndrome, or it's the CEO founder goes nuts, and that's founder, dysfunction syndrome. But the real, fatal disease is running out of money. Right? In other words, you can fix almost anything. You can bring a new CEO in, you can pivot the company, you can hire a new marketing person, you can make a deal with this distributor, you can do all kinds of things. You can raise more money at a down or up round. But when you run out of money, you're out of luck. And so, in today's market, where it went from being, as bullish a tech investment market as we've ever seen in history, during the 2020, 2021, pandemic, where everything peaked like crazy, to a significantly more difficult environment in 2022. And 2022 was really a tale of 2 years in one, because the first 2 quarters looked like 2021. And it was the second 2 quarters that really fell off the ledge. And, so when you look at the numbers, for example, in terms of venture investments in my country, in Israel, It went down from about 26 billion in 21, was an extraordinary number, down to about 15.5 billion in 2022. That doesn't sound so bad. It's only 30 or 40% down, which is the way that most of the world markets were down in terms of both, indices on the public markets as well as venture investment. But it doesn't tell the full story of how dramatic the drop was in Q3 and Q4. So we're feeling a little bit more tailwind pushing us forward in the beginning of this year. I think people are realizing that maybe the world is not coming to an end, and that, the sky is not falling, and that it really depends in our business about having the proper time frame of reference. We don't invest for next week or next month or next quarter or even next year. When you're a venture investor investing in startups, you're really taking a 5 and 10-year view of things. That's why venture capital funds are typically set up between 8 and 10 years. And the earlier that you're investing in the stage of the company, you're doing what's called seed investing or Series A investing, it'll take you 10 years.
Yeah.
Okay. It could take longer. You have to be patient, right? And you have to work at it. In other words, the most important thing in our investing is it's not about stock picking, right? You can be a great stock picker, and there are people in the public market who are activists, but they're a minority.
Yes.
Right. Whereas in our business, if you're not an activist, you're probably dumb money. Okay. Because it's not about just dumping some money in some guys and say, vaya con Dios, see you at the exit, good luck.
Yeah.
That's not going to make you a good strategy.
Yeah. You're going to have to, well, in your role and your platform is you have to be part of the ecosystem, and you have to be really helping open doors and do everything you can to try to, help the company add value.
You must. And by the way, that's the basis by which you get access for the good deals, right? The power over the last several years has really shifted a lot to the founders and the entrepreneurs because there was so much money available in the low interest, years and what almost holds. But basically, they were able to do beauty contests, among the VCs and say, what can you do for me? How are you going to help me raise more money? How much reserve do you have for your future investment? Who can you help bring to my board? Who can you help recruit, in key roles? What kind of, corporate relationships are really, core to your business where you can make more than just a name introduction?
So strategic capital. Yeah.
It's smart. It's the definition of smart money. And I'll give you something else, which is, again, wild to talk about it, in public, because people say, what's he talking about? The reality is that in the private markets, in venture capital, there is no such thing as inside information or inside. There's no prohibition.
Correct.
Right? In other words, it's almost the opposite. If you don't have insider information, you're probably dumb money. Okay. In other words, and you don't want to be dumb money, right? Correct. In other words, that's why you do your due diligence. That's why you, check into these companies. You pick up the phone, you call, people who worked with the team. In this country, we make a joke about due diligence because everybody knows who your kindergarten teacher was, but sometimes we've lost her phone number and we have to ask you for it. Okay, that's that's the level of diligence because everybody knows each other. It's a very highly networked society.
Yes. We're just going to take a moment, take a break here, and we'll be right back with John Medved of Our Crowd. Want to know how Canada's top entrepreneurs think about creating significant wealth? Join me, Thane Stenner, founder of Stenner Wealth Partners at CG Wealth Management and host of the SmartWealth podcast. Download today at iHeartRadio or your favorite podcast platform. Subscribe now. Welcome back, everybody. We're with my guest, John Medved of Our Crowd. He's the CEO and founder. Getting right back into questions with him. Looking ahead from today, going ahead the next 5+ years, what do you believe are the sectors that offer the most promising, let me rephrase that, promising in venture capital is like saying guaranteed returns. So pass on that.
You're asking me sort of like in that famous movie, The Graduate.
Yes.
When Dustin Hoffman was talking to this guy at the pool party, and he said, plastics. Okay.
Exactly. So is it food tech? Is it AI? Is it, what would you, or energy? Like
First of
where would you?
all of those are red hot. But I want
Gotcha.
to make a more general comment, which is you
Sure.
never really know. Okay, that
Got it.
sectors come in and out of favor pretty darn fast.
Yep.
Sometimes the same sector goes up and down in a matter of months. Look at crypto. Okay,
Yes.
crypto is what? You're not in crypto? What? You're in crypto? I mean, good luck, depending
Yeah.
upon who you're talking to and when it's up and down. You look at uh, the autonomous driving. There was a period there in the late teens, about 5 years ago,
Yep.
when everybody was expecting that certainly by now we'd all be driven autonomously. No question about it. It's going to happen.
Mm.
And we saw how that worked out. And we'll be lucky if by the end of the decade we're really there. And I'm not saying that we're very interested in mobility. We've got a great number of companies, but it goes up and down. Cannabis is another one. You guys in Canada, you know how there was the enormous green rush, and now
Yes.
it's the green doom.
Crush.
You know,
The green crush.
yeah.
Yes.
So, what that indicates, though, is the need to be diversified across sectors. So, my advice to people who are trying to do this kind of investing is don't just pick one sector or two. Diversify across a bunch of them, because some of these will go up and some of them will go down, just the way individual companies are. You want a lot of shots on goal. And we're big believers in food tech. Turns out that Israel now is right after the US, the second most active country in the world in terms of alternative protein, more money invested here than the entire European Union. And they're about 600 million, in that conglomerate,
Population.
about 10 million here. So that's a pretty,
Hmm.
significant activity here. We're
Yes.
big believers in AI everything. You don't have to be a fan of Chat GPT, but oh my gosh, AI is changing every industry. And yes, the robots are coming. I don't believe they're uh, at the moment angry or mad. I don't think it's anything to really worry about at the moment, but it's coming, and you've got to be ready for it. And it's interesting. At my conference, I asked a big hall of over 1,000 people. I said, "How many hands here, show me, know what GPT stands for?" I got two. It's try it out on some of your guests.
Well,
What
actually, so share. To be honest with you, I don't know what that stands for. What does that stand for?
stands for generative pre-trained transformator or transformator. Okay, ask me to explain what that actually. For that,
Only.
I've got data scientists. Like, one of the funniest parts of this summit is I get something called the pre-summit show, where I get to pretend to be a sort of talk show host, or like the old, Jay Leno or
Yeah, yeah.
Johnny Carson. I'm aging myself here clearly, or dating not Ed Sullivan. But the bottom line is that, and one of the things I do is I show a bunch of companies that we said were from our baby tech labs 00, and the audience had to figure out what was real and what was fake. And we discovered this company called Data Science for Toddlers, whose tagline was, "It's never too early to get your toddler started on the road to MIT." And everybody was convinced that that was, some kind of a cute joke. And it turns out it's a real company. Go look it up. Data Science for Toddlers. Start your babies with data science. Maybe that's a good idea. I don't know. My kids haven't started yet with data science.
Well, so looking at the picture of your triplet grandkids behind you there, just maybe paint a visionary picture of what life will be different like 10 years out. Just a
Well,
little bit of a dream, not a prediction, just some thoughts.
I think we'll be eating a lot more different kind of foods. We're finding a real change in the way that food is being produced. Agriculture is going to go through some significant changes, and I think for the better. I think climate tech is getting a lot of attention. And I believe that many of the solutions to the sort of nasty and scary weather and droughts and things we're seeing are in the technology arena. I think that our energy situation is going to get, God willing, better. It's going to take a little while, but we're making good progress on fusion. We're investing in it. Good progress in green hydrogen. Good progress in grid software and in energy storage, which is critical, and not just, EV batteries, but, we've got a company that's storing water underground and using the earth's pressure to generate energy as it gets pumped out again with, so that there's all kinds of things that are going to change in that area. I think that AI is going to eliminate a lot of jobs and create new ones. I think that the smart universities are not trying to prevent their students from using ChatGPT and similar products, but rather encouraging them to use them, because to the extent that they can get up to speed on that technology, they're going to have an advantage. I think that quantum computing is going to become real. I saw yesterday one of my companies demonstrate for the first time a quantum encryption link hooked up to one of the world's leading routers. Okay, and it works. And that's very important so that bad guys can't steal our data. I think that cybersecurity is going to continue to be this cat and mouse game, which is going to generate a lot of returns for investors. Here in Israel, actually 40 cents of every dollar invested globally is invested in Israeli cybersecurity, probably our strongest suit here. I think that healthcare is going to be changed like wild. I was this morning with one of my CEOs in a healthcare company that is basically using AI to help discover drugs. And they have a huge contract with Pfizer and now with 5 other of the 10 major pharma companies. So this is going to make pharmaceuticals more available at cheaper prices and quicker. There's huge amounts of personalization going on in the healthcare area, where we have companies that are preventing prescription malfeasance so that someone doesn't hook you up to a, infusion pump and put the wrong drug in you, which unfortunately happens altogether too much, or even just give you the wrong prescription to fill from your pharmacy. We have companies that are working on how to essentially predict which immunotherapy is going to be effective for you to make cancer therapy more effective. We have a publicly traded company that has graduated, and exited for us, called Alpha Tau. We're making radioactive coated darts, okay, that literally can be shot into a solid tumor and have very interesting, clinical results. And it just goes on and on. I'm a real look. If you're not an optimist, you shouldn't be a venture capitalist. Okay? It's very hard to make money on shorting in the venture capital world. But the bottom line is that I really do believe that there's a lot of technology which we're going to see develop over the next 10 years, remarkable amounts of technology that will do well for many investors, but will do well for the planet. And I think that increasingly we're seeing double bottom line investing, where people are investing not just for a monetary return, but for a social and a do-good return. So when you invest in a company, for example, that has got a new energy storage solution, or we have a company called Blue Green Water Technology, which attacks toxic algal blooms, which affect so many of our lakes and rivers. Beautiful, pristine lakes are dying because they've got this algae, which people can't seem to get rid of. And this company has figured out a way to do it. Literally, a matter of days, it cleans up, it becomes a carbon capture, element. So it takes carbon out of the environment, and it lets people drink it and swim in it again. So when you invest in this company, which by the way has got millions of dollars of revenue and is growing quite nicely, thank you. On the one hand, yes, I think you're doing well for your, potentially, risk factors and included, in your portfolio. But it's funny, I had some people who saw some of these companies on stage, and in particular after one company, which was about the most meaningful moment at the summit we just had, where a guy got up on stage, one of the CEOs, and told a story about his company, which makes 3D surgical visualization software that allows you to see inside the brain or inside the body to both do patient education, but more importantly, surgical planning and practice. And they actually use it in the operating room. And he told this story about a kid who had a horrible tumor on his pelvis, which was really hard to
access
operate on, and they were worried that he'd have to lose his leg or all kinds of horrible things. And he said, with this software, this child is now better. Let's bring him out. And so the kid comes out with a soccer ball, and he's kicking it and looks fine. And he says, this is wonderful. How did your family get access to this wild sort of next generation technology? He goes, well, my father arranged it for me. And he said, wait, is your father somewhere here in the audience? And he points to him and says, yeah, you're my dad. So it turns out that the CEO's son had his life essentially saved
by that technology.
There was not a dry eye in the house. It was like, and that, I think, tells this story about how you can do good and make money at the same time. And I had somebody afterwards come up to me and said, look, my portfolio is looking good with you. I know we've been through a difficult year, but I'll tell you, after that, you know what? Even if you don't make me money, good on you. Okay, this is important stuff that we're doing together. And so what we're trying to achieve at our crowd is to build a community, global community, which is, I think, in itself an important statement, where you have, people from all over. And especially this year, it was really cool because we had this huge delegation from our neighbors in Abu Dhabi and Dubai and Morocco bringing startups. And you see the children of Abraham, okay, getting together, not to argue and to fight, God forbid, but to provide an inspiration to the world of people who can settle their differences and then go on to innovate together. And that was really moving for me as well.
So 40 years in this business, when you first started out till now, are you shocked with kind of where the world has gone from when you first started out?
No, the only thing that shocks me is how quickly it's gone. I mean, how did this happen? How did 40 years pass? Okay, it seems like yesterday. And I think the challenge is to get up every morning and, hit the day with sort of a spring. Sometimes, by the way, it's like, I feel like that old movie in, was it All That Jazz, where the guy had to, take the pills and slap his face and say, showtime, I got a little bit of that, but I'll tell you the neat thing about my business is the fact that you're expected to reinvent yourself all the time. That you're constantly learning. And I think that's a lesson that we all have to take into account today, that you can't just be trained for one job and one skill set 40 or 50 years ago and just keep doing it. You got to, you got to adjust, you got to be adaptable, you got to be into reinvention. And it's, look, back when I was growing up in the 60s and 70s, it was forever young, brother. Okay. And I believe that. My The reason I'm in the tech business at all is because of my late father, Dr. David Medved, who was a remarkable man who grew up in the south side of Philly in the Jewish ghetto, Jewish, Italian, and Irish. Okay. He went to, public school, got his PhD in physics at Penn, and then he moved out to California to be a rocket scientist and a surfer in San Diego. And that's where I was born. And I had a, quite a nice California upbringing. And my father, lured me into one of his several startups that was focused on fiber optic communication. And, I said, Dad, I didn't study science. I have no background in physics. What do I know about any of this stuff? And he goes, don't worry, I'll teach you. And even without me, you learn it on your own. And he sort of was always this model of really great work-life balance. At 3 p.m, we'd be working hard on like a RFP to get a bid in. And he would say, Sonny, it's time to go to the beach. Okay, our office was in Santa Monica. So he would just like take the hour and we'd go swimming. Okay, and we'd come back refreshed and, we'd turn up his loud classical music and walk around in his, skivvies or something. He was like, my father was quite the amazing man. And, he sold his last company when he was in his mid 70s. And he went to work as the chief scientist of the company that bought him in optical communications. And he worked until the week before he died. And the week before he died, we had a big birthday party for him because he was 83. And it was, in our tradition, we believe you get a second bar mitzvah. Bar mitzvah is 13 years old. Okay, you're supposed to live 70 years old. That was what King David lived. So at 83, you get a second chance. We had this big party for my dad. And what was he doing at this party, which turned out to be a week before he passed away? He was walking around pitching investors on his next startup. He was ready to do it again. And, we put on his gravestone, Odyanavun Besevad Shenim Varanim Yu, which means you will be fertile in old age and you'll be fresh and renewed. Okay. In other words, that the idea is not to give in to getting old. It's not about age. It's about how you think, about your attitude. Yeah. And this industry that we're in terms of investing, and especially investing in startups that are driven by technology, it's a huge blessing. It's a blessing to be working with people who are committed. It's a blessing to be working on companies that can do good things. It's a blessing to be creating jobs. People should realize that when you're a business person, you're not some kind of a corrupt jerk who's trying to steal money from people, but you're a partner with God in terms of creating value and fixing the world. And I feel very privileged to be living in a renewed state of Israel, which is the startup nation that's doing so much of this. And I hope that, like my dad, I'll be able to, go out, at full gas.
Well, you know what, John, that is a beautiful way of honoring your father, which is very good. And it sounds like he was a brilliant man. And it sounds like he did keep very active right till the end, which is amazing, right? It's remarkable. And you as his son, it's inspiring you to this day. So that's pretty cool. That's pretty cool to hear. So any last tidbits? I've got a fire truck going by in the background.
Don't hear it.
I'm 23 stories up, but it still sounds. Any last tidbits you'd like to share just in the last few minutes together?
Look, I think that there's a growing realization that individual investors have to get access to alternative assets, right? There's always been this argument, is it 60-40 bonds and equities, 40-60, 50-50, but they leave out the whole alternative space.
Yes.
And it turns out that the really smart money in the world understands what alts can do for your portfolio. The problem is it's been hard to get access because, you take venture capital, which is perhaps the most esoteric, of the alternative asset classes. It's about who do you know? How do I get into this deal? They speak a different language. They talk about preferred stock and liquidation preferences and these things that, you're not getting that information on Reddit. Okay. It's not happening, So what's happening though is that more and more individual investors are getting into venture capital through platforms like our crowd, that more and more individual investors are getting into private equity. And by the way, we're starting to launch products there, which are like baskets of the 50 largest private equity funds, okay, which are interesting. And these are not for, the minimums that used to be necessary in this asset class, right? If you went to a, big and impressive venture capital fund, and assuming they were even willing to have the conversation, they'd say, okay, well, our minimum is $10 million. Well, that's good if you got that kind of money, but even many of your listeners, that's still aspirational, and you don't want to over indicate to this class. Okay. Right. It is, it is a little bit on the risk acceptance side. Yep. But the bottom line is that I think there's this wave coming of the rise of the private investor who is now going to go not just continue to be, educated and access public markets and access bonds, but they're going to be increasingly doing more of these alts. And we hope that our crowd will be able to, help people along on this journey, give them a good access to interesting deals, try to educate them so they make their own decisions, but, work with hopefully trusted people who, are trying their best to deliver results and to deliver, insight into what's a pretty fascinating part of the investment world.
Very well said, John. And I want to personally thank you for taking the time. I know you've had a particularly busy week after your summit and the various single malts that have been partaken. But thank you for taking this time. I know it's the evening there. This has been an absolute pleasure interviewing you, and thank you for sharing your thoughts and your wisdom with our audience.
Thank you, Thane. It was fun.
Absolutely. Well, that was with my guest, John Medved, the founder and CEO of Our Crowd, coming to us from Israel, which was a fascinating interview, and I really, really enjoyed it. Our next guest is Steve Sidwell, who's the CEO and co-founder of Nexi, which is a very exciting company that's become Canada's largest unicorn company in a little bit over 3 years. So it's actually one of the fastest growing companies out there. So I get to interview him in March. So please do listen in. Thank you very much.
The comments expressed in this podcast are the results of work done by Stenner Wealth Partners. They may differ from the opinion of Canaccord Genuity Corp. and should not be considered as representative of Canaccord's beliefs, opinions, or recommendations. All views expressed in this podcast are provided for informational purposes only and do not constitute an offer or solicitation to buy or sell any securities. The statements expressed herein are not intended to provide tax, legal, or financial advice, and under no circumstances should be construed as a solicitation to act as a securities broker or dealer in any jurisdiction. All views are intended for general circulation only and do not have any regard to the specific investment objectives, financial situation, or general needs of any particular person, organization, or institution. Canaccord is a member of the CIPF.